Srimati Ilaben Bhatt said, "It is women who are leaders in change, and with their participation, poverty can be removed. It can never stay on forever." And all of us gathered here together today are here in that pursuit as well. To move forward with the inauguration session, I would like to invite a few dignitaries on the stage. May I please welcome on stage Mr. Ajit Kumar Maiti, Chairperson of the AMFI Board. Please put your hands together for our dignitaries. Shri Shudakta Mondol, Deputy Managing Director, SIDBI, Mumbai, please come up on stage. Dr. Alok Mishra, MFin Director and CEO, please come up on stage. Shri Gigi Mamen, Executive Director, Sadhan, please come up on stage. Shri Joydeep Roy from PwC, please come up on stage. Shri Mohammad Abdul Awal and Shri Mohammad Enamul Haq, please join us up on stage. Shri Chandrasekhar Ghosh, Managing Director of Bandhan, please come up on stage. And with this, I hand over the dais to Mr. Ajit Kumar Maiti, Chairperson of the Board of Association of Microfinance Industries, West Bengal. Shri Ajit Maiti, may I please request you to come up on stage? On the dais, sorry, sir. Please, Ashun. We will start, আমরা শুরু করব with a small video on Association of Microfinance Industries, and then, sir, over to you for a few words.
Now we will see the MP story here. Now I am inaugurating this story.
Microfinance has significance in India for providing financing to citizens at the bottom of the economic pyramid.
পশ্চিমবঙ্গে 1995 সাল থেকে মাইক্রোফিন্যান্সের কাজ শুরু হয়। আস্তে আস্তে প্রথমে মাইক্রোফিন্যান্সের যে ঋণ দেওয়ার ব্যাপারটা ছিল, সেই ঋণের ক্ষেত্রে প্রথম সাহায্য করে রাষ্ট্রীয় মহিলা কোষ। আমরা এই কাজটাকে শুরু করেছিলাম প্রথম। তখন মনে হয়েছে যে আমরা তো সারা পশ্চিমবঙ্গের মানুষকে তো আমরা এই পরিষেবা দিতে পারবো না, এই পরিষেবা কোণে কোণে পৌঁছাতে গেলে বহু অর্গানাইজেশনের প্রয়োজন। আমাদের মনে হলো যে আমরা যারা এই মাইক্রোফিন্যান্সের কাজ করছি তাদের একটা অ্যাসোসিয়েশন দরকার। একটা অ্যাসোসিয়েশন হলে পারে তার অনেক রকম সুবিধা আছে। কারো কোনো রকম সমস্যা হলে পারস্পরিক আমরা সাহায্য করতে পারি, ব্যাংকের সাথে যোগাযোগের ক্ষেত্রে একটা সুবিধা হতে পারে, সরকারের সাথে নেটওয়ার্কের ক্ষেত্রে অনেক সুবিধা হতে পারে। সেই উদ্দেশ্য নিয়ে মাত্র 10টি অর্গানাইজেশনকে নিয়ে এমপিডব্লিউবি প্রতিষ্ঠিত হয়।
Microfinance, because of its grassroots connectivity, can provide income-generating activities and improve livelihood in both rural and urban regions.
The beauty of our association is we are not only with the regulated entities, we have all our NGO friends who work together. We do several activities with the small MFIs for enriching the employees of the small MFIs, and the industry updates are getting shared, meeting informal and formal together with several small big meetings, and this way the small MFIs are growing to the medium size and medium to the big.
Eastern region of microfinance, out of 13 states, 24.62% already been covered by the all of microfinance institutions, but 75.38% remain untapped. MPWB can take initiative among the members to tap the untapped borrower, untapped family, so they can get financial service and they can improve themselves as a sustainable improvement. মূলত মাইক্রোফাইন্যান্স সার্ভিস যাতে আরও বেশি করে রুরাল এবং আরবান এরিয়াতে পৌঁছে দেওয়া যায়, সেটা অ্যাপটির মূল উদ্দেশ্য, এবং মেম্বারও তাতে সাপোর্ট হয়, এমপিও সাপোর্ট পায়।
Furthermore, microfinance is an effective instrument for empowering women who make up the majority of its borrower base.
We are planning for a training center also very recently. We have taken 2-3 researcher also, trainer also, and we will be having a lot of training in the ground. We need support from all members of the institution, and also who are working in this place of the livelihood and financial inclusion. They should join with us and they should help us.
The COVID pandemic time has been difficult for all the players in the sector. West Bengal AMFI has played a very important role during this period. It has shared information, it has shared advisory, it has frequently organized meetings to help the organization and thereby the clients to deal with the crisis. Digital lending is coming in a big way. The Government of India is supporting digital initiatives. The role of AMFI will come in terms of providing training to the players, providing training to the individuals within the sector, providing training to the ultimate base of the pyramid.
It was formed to deliver better services to the poor, thereby helping this population improve their standards of living.
AMFI has taken initiatives for enterprise development training for all women with collaboration with SIDBI. I think these initiatives will give a big mileage for the women for their own livelihood. All the members institutions of AMFI West Bengal are very much supportive to the organizations to make these organizations a very successful one as an association.
AMFI West Bengal envisions a community of microfinance institutions who are committed to initiating a significant change in the lives of the poor, especially the women. AMFI West Bengal currently caters to more than 65,33,000 women by providing them financial services, especially microcredit. With a membership of 48 microfinance institutions, banks, especially microcredit banks, support approximately 33,136 employees from economically challenged backgrounds. The sole objective of AMFI West Bengal is to initiate a significant change by empowering the poor, especially women who are socially disadvantaged and economically exploited. With this objective in mind, AMFI West Bengal monitors the MFIs to ensure that they follow the RBI guidelines and adhere to the codes of conduct prescribed by the RBI, MFIN and Sadhan.
50% people are normally not get the access of financial services. If we like to reach, we have need first target how we can be like to increase the per capita income.
The State Association has taken a positive step with MFIN for radar implementation that has given AMFI good information about ringleaders, negative area notifications, etc. To help our member organizations move forward for loan appraisal and operational concern, Sadhan has also had a good operation with AMFI West Bengal towards organizing meetings with leaders, organizing microfinance summit, etc. AMFI West Bengal initiates the district-level coordination meetings, stakeholders meet, and resolves many an issue that are being faced by the MFIs and bank members in the operational area. The association focuses on virtual meeting with different lending companies, including ISAF, Small Finance Bank, Bandhan Bank, NABARD, Ujjivan Small Finance Bank, Arohan Financial Services Limited, etc. AMFI West Bengal is grateful to all the members, stakeholders, banks, lending institutions, and IT companies for their unstinted support. AMFI West Bengal has also collaborated with Sadhan, SIDBI, NABARD for the support and guidance. We also extend our heartiest thanks to the District and state-level government administration, including the police department, for support and cooperation. AMFI West Bengal is continuously working to bring prosperity and self-dependence into the lives of the suburban and villages to create a society that is more equal and respectable.
May I request Mr. Maiti to please come up and share a few words with us.
Good morning, Suprabhat. It's a very nice video. You all are knowing about the MP, its formation, and its activities. So, I have now welcome this seminar, 7th seminar of MP. Here, all the dignitaries, mainly Mr. J.G. Menon, Mr. Alok Mishra, Mr. Chandrasekhar Ghosh, MD Bandhan Bank, Sri Shudatto Mandal, DMD, SIDBI Mumbai, Sri Joydeep Roy, Partner, PwC, Sri Mohammad Awal, Executive Director, CDF, Mr. M.T. Mwandingait, GM, Department of RBI, Regional Office, Kolkata, Srimati Deepmala Ghosh, GM NABARD, Kolkata Regional Office, and also I heartily welcome to all the MFI and bank leaders, bankers, and bankers from Kolkata and other parts of India, and many delegates present in this summit. I also welcome to all media personnel, all spread these messages to greater masses. I also welcome to our beloved sponsor companies who supported this summit in a great extent, otherwise it could not happen. Airtel Payment Bank as conference partner, SIDBI, Arohan, Sotto Micro Capital, M Ensure as principal partners. Awazde as co-sponsor, associate and other sponsors are Bandhan Bank, Jopper, Blueprints, IDBI Bank, NABARD, Asai, Resurgent India, Aqua Health, SAS, Satin Credit Care, and Sun King. The technology partners are Legality, Bitro, Craft Silicon, Pixel Solutions, Sense and Teach. So, today, this seminar is the 7th seminar. We will enjoy all the sessions. We tried to start this in time so that we can end the seminar on time also. So please all should be present till the end of the day. That would be my request. Yesterday evening, I like to mention here, we had a great opportunity to meet some of the dignitaries here, and we have discussed some about the Bangladesh microfinance, how they are operating, regulations, etc. That was a great experience. I think it is time has come again that without savings, microfinance organization cannot sustain, they cannot be self-supported. We are always depending on the bank, otherwise it is not possible to lend our borrowers. So it is most of the time there is a problem of, I think, regular cash flow, because sometimes delayed sanction, etc., it creates problems in the field. We know all the practitioners. So in India, there is no provision, but in Bangladesh, there is provision of savings. So we should, I think, appeal to the government, and I think MPIN and Southern should take initiative, negotiate with the RBI and the government, how other than banks and the small finance bank, the other rest microfinance practitioners, how can they take savings from their borrowers? In that case, my suggestions will be either for the rest of the microfinance practitioners, there should be a separate regulator or regulatory authority like IRDA. In Bangladesh, there is a microfinance regulatory authority, MRA, like that can be found here. Or there is a commercial bank, there is a universal bank, there is a small finance bank, only one is there, is the micro. So government also think about the micro bank for the rest of the microfinance organization, so that they can take savings from the borrowers. Then it will be completely microfinance aim, savings first, then credit, then insurance, then remittance. It will be completed. Thank you all.
Thank you, Mr. Maiti. And welcome you all once again. May I please invite now Mr. Chandrasekhar Ghosh, Managing Director of Bandhan Bank, to please come up to the dais for the inaugural address.
Good morning to all of you. Respected Chairman of MP, Mr. Rajit Kumar Maiti, and Sadhan Executive Director, Gigi Menon, MFIN CEO, Mr. Alok Misro, CDF Executive Director, Mohammad Awal, Mr. Mondal from Deputy Managing Director of SIDBI, Mr. Joydeep Roy, the PwC partner, and our very well-known Tamalda, and Arohan Executive Director, MD, and the NABARD CGM, I hope that GM, Madam. So thank you to all of you to join the program, all the delegates and industry leaders and industry future leaders. Good morning and Happy New Year to all of you. How I can start on that? 2 months before, I went to visit the Darjeeling. When I walking on the road, I saw that there is a small restaurant and running by a woman. And very interesting, I like to know is it the borrower of microcredit or not. And I entered and talked with her more or less 1 hour. She, of course, the name is Mrs. Rai, and her husband in the 12 years before was a restaurant worker, 10,000 rupees or 11,000 rupees monthly income. And she said that why not she can start. She started to take a loan, 12,000 rupees, and started one restaurant in Darjeeling, very small. When I met her, she explained the restaurant along with the 24 two-wheelers, four-wheelers, 6 homestay, per month income 5 lakhs rupees. This is the impact of microcredit. And we reached those people who are not reached in there. This is the called that microfinance that changed the life of the people, and especially in the women. Second point, that we reached those people where the bank and financial institution not yet reached to those, which is called the last mile connectivity we have only. Third, if we see that how she is empowered, she feel proud that I am earning 5 lakhs rupees and husband working with hard, and son is studying in convent school. So how we are empowering through this the small ticket size of microcredit, this the people are feel the proud about their life, about the status of the society, and about the country. So I hope that lot of impact have of our intervention, and financial inclusion really have been done by microfinance institution. And microfinance institution are reached more of this the rural and unreached area, unbanked people, underbanked people. So what is the final result? Final result is Ms. Rai have been shown that yes, it is an impact. All together in a Indian microcredit industry reached to this the 6 crore customer. If we go to this 6 crore, then nearly 4.5% of the total population. But if I go to the household basis, the 23% household already reached by microcredit organization along with the bank and all. This is a very big risk happened. So that income is increasing in the bottom level. It have been helped to not only this the people, also helped to per capita income of the country. The industry is now around 3 lakh crores. The book, if I say that portfolio, is a big amount. It can be reached to this another 3 lakh crores by another 3 to 5 years, not a problem. We can reach on that. We have that the 1 lakh crores employees. To create the employment direct by this sector is a 1 lakh employment. 1 lakh crore employment. 1 crore employment. So that is also big opportunities. If I go to this 6 crore of the microcredit customer, they are also created new employment under them. Because of that, Rai said me that the 20 employee working under her. So that means that lots of employment we are generating on that. Very good one information given that the MFIN, the per year, the microcredit 60 lakhs borrower added. This is a big amount. 60 lakhs borrower added in per year. And that is a very good way we are reaching to the people, and 30% CAGR is a growth. My point is that we need scale, and India has a country where we can be like to reach. Otherwise, the impact will not come to visualize to all of us. Lot of things have been changed now. Basically, if we go to this, the earlier microcredit, all are NGO. Now we are very rare find out the NGO. It is now coming as a professional financial organization. It has been transformed to the NBFC, NBFC MFI, Small Finance Bank, and the Universal Bank. All of the regulatory entity now lending to this sector, and it is also achievement of the microcredit sector. Not only that, if you see the 10 years or 15 years before, we are knocked door to door all the banks to give the money for lending to these people. Now bank is buying microfinance institution. They started microcredit in their the business vertical. Other than we are transformed from microfinance to bank. Formal bank also now doing. How it can be also attract them and affect them, they also coming to this sector and doing their business on that. Couple of big changes has come to the Indian microfinance industry. If you say that we are introduced and that the credit bureau data upload, credit bureau checked and then given that the money to the customer. This is a very big things happened in a banking and microfinance industry, which is India done, till now have not done any of the other country in the world. Second point very recently has come, household income assess, then give the loan. It was not early, it has been lot of things have been changed, has come on that. Third, I hope that as per my knowledge, 100% disbursement happened by the account. Earlier we have disbursed by cash, now through the account, and collection also done by many of them is account. But one point is clear, the more or less 100% of the collection happened by tab or mobile app. So this is the change has come lot of things to the sector. And also we are seeing that the lot of digital intervention have been started, and it is also helping to the customer to pay the installment by digitally. So that the couple of changes has come by regulation, regulator introduced, we introduced, and making on that the good way. Some other thing also has coming now. One is there earlier we know that partnership model, we know that the BC model now has come as a co-lending model. The some part of this, the money as given by bank to the customer, and microcredit organization or lenders also give the money. If it's a 50-50, sometimes 60-40, sometimes 80-20, this is a good model has come now to jointly lending to the customer of microcredit. Earlier we know that the joint liabilities group for the customer point of view. Now joint responsibilities taken by the lenders together is coming to lend to the borrower. This is a new model has come. This is also very good for industry growth on that. Next, another one has come. This is called the fintech. So fintech also now penetrating to the sector which we are microcredit on that. That is also another opportunities has come, how tie up with the fintech to reach to the more people where till now we have not yet reached. Third is there as per experience of earlier, the single loan, complete and give it a next loan. Now it is coming to the multiple products, multiple purpose, and we are reaching to the customer to giving this the money. Otherwise, they are going to the other lenders. And final one point on that, the new introduction has come, data analytics, and data analytics helped on that the industry to do the how the customer need we can be like to assess and accordingly design the product and provide the services on that. I feel that the another point, in this the moment, there is a very important role playing in future, which is called the role of IT. Technology is a biggest advantage in this moment. Without technology, running the microfinance or any of the finance is a very big challenge. So should be need to how the IT can be like to help us and use such a way how we are quick can give the service to the customer. Yes, this transformation is not for India. This transformation happening in the across the world of microfinance. It may be affect to fundamental characteristics of microcredit. It can be transformed such a way and introducing in a different way is coming. I feel that the future, the fundamental microcredit character will be ready to change and the process of the organization also will be like to change. Many of the organization already started on that. Process of microcredit is by the app based, by the digital based, everything on that. Without paper, it is happening on that. Next point on that, the very need to develop an innovative way to design the product and services and the processes, which can help us increase the efficiency of the employees and cost control. What is the future I feel that the industry can be or industry will be? New partnership should be like to search. Is a co-lending or the full lending? The different way we should be like to make the partnership of the different organization with the fintech or the bank or SFB or the other way, even telephone company. They are also coming on that. Next is there the new investment channel will be like to find out how we can be like to make some investment attract to this industry. Of course, I mentioned on that the leverage the technology. It's a very big opportunities in the future microcredit. And all these objective will be like to fulfill the demand of the customer. So that is need on that the data analytics, analyze the behavior of the customer. How many of your customers are going to the other lender to take the two-wheeler loan? How many of your customers are going to other lenders to take the housing loan because their income increase? If we not address it with the data analytics, with the credit bureau check, so we'll be like to miss some of the business. So in that sense, we have need to diversify the microcredit, not in a one way to give the one loan, close and then give the next loan. Final my point, microcredit is a high touch. We should not be forget. High tech can be helped us and it can be like to complementary, but high touch will be not like to miss. So thank you to all of you given these opportunities. I wish the success of this conference and today. Thank you to all of you.
Thank you, Mr. Ghosh. Indeed, the microfinance industry has come a long way, and together we will take it forward. May I now request Mr. Shudatta Mondol, Deputy Managing Director, SIDBI Mumbai, to please come up for the keynote address.
Shri Ajit Maiti, Chairman, AMFI West Bengal. dignitaries on the stage, dignitaries of the dais, my friends from the Microfinance Institution fraternity, entrepreneurs, ladies and gentlemen, সুপ্রভাত। গতবার যখন আমি এই ইভেন্টে এসেছিলাম তখন বাঙালি নববর্ষের পরে পরে এসেছিলাম। কোইন্সিডেন্টলি আজকে যখন আপনাদের সামনে এসেছি ইংলিশ নিউ ইয়ারের পরে পরে এসেছি, সেই জন্য আপনাদের সবাইকে জানাই নববর্ষের প্রীতি ও শুভেচ্ছা। It is indeed a great pleasure for me to be part of the 7th Eastern India Microfinance Summit 2023 being organized under the aegis of AMFI West Bengal. Beyond doubt, the microfinance sector has witnessed, weathered and overcome several crises in the past successfully. I am indeed glad to see that the microfinance sector is on a robust rebound post-COVID-19 stress with improved disbursements and collections. And the sector is projected to surpass rupees 5 trillion mark in the next 3 years as per the estimates of MFIN from the present level of close to rupees 3 trillion. It may not be an understatement to say that a brighter side of COVID-19 pandemic is that it has offered us the time to halt and ponder over matters that have been in general taken for granted. Having seen and managed several crises in the past, the focus is drifting away from immediate liquidity needs and damage control to building a stronger and more resilient microfinance sector. Here comes the need to brainstorm on the need to bring microfinance fully into the digital age, which I believe is the essential way forward. The traditional microfinance sector has been facing challenges posed by digital technology for quite some time, and the pandemic has accelerated this process. Hence, the time is now more apt and it will be worthwhile investing in digital transformation of traditional microfinance. We would all agree that the unprecedented rise of fintechs and arrival of blockchain, super platforms and artificial intelligence have significantly changed the landscape of financial services. The expansion of digital financial services indeed means greater financial inclusion. Financial inclusion is not about the number of accounts opened, but about whether these are able to improve and advance the lives of the poor people. In my opinion, MFIs play a crucial role in reaching out to the unserved and the underserved populace and significantly aid in financial inclusion. With tremendous progress in the fintech ecospace, the scope, role and relevance of MFIs needs a thorough overhauling. MFIs of course matter because unlike fintechs, they support the lives of poor people by providing financial services to low-income and excluded segments on affordable and responsible terms. While technology-enabled business models are much faster and better able to adapt and scale, whether these fintechs can deliver the same services responsibly, especially for the kinds of returns expected by their investors, is an important argument. Also, whether they will be able to reach the poor in any meaningful sense, particularly with products aimed at supporting sustainable livelihoods at the lower end of the income scale, is another challenge. In this context, therefore, the position of MFIs needs to be seen through both impact and scale. MFIs have, by and large, accomplished the objective on impact, but perhaps not so much on scale. Fintechs are easily achieving scale, but may not bring the same kind of services to the market and also deliver them in a responsible manner as the MFIs do. Scale is therefore a sine qua non for MFIs, and so it helps them in competitiveness and also to build resilience. Large MFIs offer their customers a better deal and earn profit margins of 2.5 times greater than small and medium-sized MFIs. For MFIs to stay competitive and build own resilience, they therefore need to get scale. Scale remains a serious challenge in microfinance. While new digital models have proven their efficiency and ability to scale, it is not in essence reaching the poor. The fintechs are likely to reach more formal parts of the micro and small enterprise market since its ability to reach small merchants who lack digital means of payments accepted is limited. However, as platform-driven business models increasingly find ways to digitize and provide credit to small and informal merchants, this may change over time. MFIs therefore need to observe these trends and find ways to incorporate them in their own businesses, either by building their own capabilities or partnering with fintechs. Digital transformation is changing the way the microfinance sector operates. Over the past 10 years, microfinance providers have been dealing with new entrants in the field leveraging technology to disrupt the way financial services are provided to low-income and unbanked populations. Today, MFIs have to adapt to survive, with adaptation ranging from digitizing existing products and services to a complete digital transformation of processes and introduction of new products and services. For MFIs, digitizing services is no longer an option, but an imperative to remain competitive and reach the last mile. To foster sustainable financial inclusion, MFIs need to embrace new technologies and reconsider their business models. Digitization is an opportunity for microfinance providers to leverage their license, customer base, and outreach to rural areas and low-income clients. Digital solutions help MFIs deepen customer engagement and product usage, and in turn promote and increase financial inclusion. Large segments of the population in developing markets are financially excluded, and including the unbanked requires financial education and especially designed services which microfinance providers are familiar with providing. Digital channels make it much easier for microfinance providers to collect data, and data analytics play a crucial role in determining risk profiles for financially excluded and new customers. Mr. Ghosh emphasized on the need for data analytics for the MFIs to be able to offer better services and newer products to their clients. Some of the other benefits of digital transformation would include lower risks and safer funds, faster transactions, digital transaction history, which allows customers with no access to formal banking to begin building a transaction history, which will later enable them to access loans more easily, operational efficiency, client acquisition, and diversification of customer base with value-added services, reaching rural areas at a lower cost, greater customer loyalty and retention, additional revenues, greater savings mobilization, etc. There are numerous challenges in traditional microfinance models that will impede the process of digitization, particularly weaknesses in the business model, weak governance, difficulty in attracting technical expertise, inadequate resources, rigid business models, and reliance on manual processes. Therefore, digital transformation would involve more than just investing in technology and will be a huge exercise in change management, warranting strong commitment from the board to the level of field officers. Further, ability to stay focused on the long-term goal is crucial. Focus and adaptive approach that enables adjustment and improvement is a necessity in achieving real digital transformation. Moreover, good digital skills are important and often found lacking in many MFIs. Having core staff with ability to access technology-driven solutions and guide their adoption will be important, and these skills are scarce and expensive. Before I conclude, I would like to share some of the digital initiatives being undertaken by SIDBI for the benefit of the audience here. We are undertaking a formalization project along with the Ministry of MSME. As perhaps you all would be aware that Udyam registration is mandatory for the MSMEs to avail of any benefits under any of the schemes, either from the state government or the central government. So much so that even for priority sector lending classification, the Udyam registration number has been made mandatory. So if a bank lends to a micro, small or medium enterprise, if that enterprise does not have an Udyam registration number, then the bank will not be able to classify that loan as priority sector lending. Okay? And this is one of the reasons why many of the even large banks are falling short of their targets, and there is a huge shortfall in meeting the targets because of that. One of the main challenges in getting the Udyam registration number is the PAN card, which is mandatory for the formal Udyam registration. There are estimated 6.5 crore MSMEs in the country, out of which I believe less than a crore have actually got registration on the Udyam registration portal. So what SIDBI has proposed to the Ministry of MSME is that we will have an Udyam Assist platform, where we will create a separate platform for generating the Udyam registration number, and we will do this in assistance with the assistance of the partners in the banking sector, the banks, the NBFCs, and particularly the MFIs who actually have these micro enterprises as their customers. So through an assist mode, the lenders who already have data on the micro entrepreneurs will be able to then upload that data onto the platform and then certify that whether the entity is a micro, small or medium enterprise. Now the reason why the PAN number is important and mandatory for generating an Udyam registration number is that through the PAN number, the ITR return is accessed based on your consent, of course. And through the ITR return, then the assessment of the income, or that is the turnover, and the investment is made, and therefore the classification into micro, small and medium enterprise is given. So since the micro enterprises generally do not have a PAN number, or even if they have a PAN number, they generally do not file their income tax returns, they are not able to therefore register on the Udyam platform. We, in partnership with the banks and the MFIs, will be then uploading this data of the micro entrepreneurs and generating the Udyam number. There will be a separate series of the registration number which will be generated out of the Udyam Assist portal of SIDBI. However, this will be a valid Udyam registration number, and the Ministry of MSME has given its written consent for considering the Udyam Assist number or Udyam registration number through the Udyam Assist portal as a valid number for the priority sector lending classification. The scheme has been, or the portal has been formally launched day before yesterday in Delhi. We will soon be reaching out to all the microfinance institutions to assist us in getting the micro enterprises, their customers, onboarded onto this platform and generate the Udyam registration number for them. Now, we don't want to stop only at the Udyam registration number, because that is the first step in bringing these micro enterprises onto the formal sector. Having onboarded them onto the formal sector, the question is what next? So what we plan to do is, we are again working with both DFS and Ministry of MSME in launching a Vyapar credit card. Now, people like you and I who either have salary or known sources of steady income get a credit card from a credit card issuing bank. And this credit card allows us an interest-free credit of up to 40 to 50 days, depending on when you use the credit card in the billing cycle. However, a micro enterprise does not enjoy this kind of a benefit. So the question was that why can't we provide a similar service to the micro entrepreneurs who may have a very short-term working capital requirement of 30 to 40 days, and having an interest-free credit during that period would be of immense benefit to them. So this card is being worked on by SIDBI in association with IBA. We are working out on the finer details, where small limits will be sanctioned by the individual card issuing bank, and a pure play credit card would be issued to them for use for their commercial activities and not for consumption activities. So certain merchant codes, it will be applicable only on certain merchant QR codes to ensure that the consumption expenditure is avoided through the credit card. The beneficiary will have the ability to either pay the full amount on the due date or pay part of it and roll it over. It will act like a normal credit card that you and I have. And we are also trying to see whether the interest rate applicable on the rolled over amount or the unpaid amount is lowered, can be lowered. And that can perhaps happen through a subsidy from the Government of India. Alternatively, we are also working on the possibility of a cashback for prompt payment by the micro enterprises. So this card will be launched very shortly. The third endeavor that we are making is developing the GST Sahay portal, where unsecured invoice financing will be done, totally digitally, contactless, fully automated. We are developing this portal and getting it tested under the RBI's sandbox, regulatory sandbox, the third cohort regulatory sandbox. The product is being tested now. It is otherwise fully ready. All the GST accepted invoice can be financed on this platform. It will act more like a marketplace. So the seller, MSME seller, will upload the invoice on this portal, and there will be a initial screening done. A deduplication will be done on the invoice, which will then be shared with the other participants, the lenders, onto the platform. And through an auction process, a financing will be made available to the micro enterprises. The fourth initiative that we have undertaken is something called a Fit Rank, which we have launched very recently. In collaboration with Civil TransUnion and OPL, we have developed a ranking product for the micro enterprises, and this is different from a credit rating, because credit rating traditionally relies on balance sheet data, and balance sheet data, the availability and reliability of a balance sheet for a micro enterprise or a small enterprise is in doubt, and the model which is used for credit rating has an inherent bias against the smaller and micro enterprises because of the sheer size. So you will not see any of the MSMEs actually getting a AAA rating, which then impacts their pricing when they go to the loan market. So what we have done is we have used alternate sources of data. There are 3 pillars to this fit rank. One is the GST data, the second is the income tax return data, the third is the bank account statements through the account aggregator framework. So all these 3 statements will be fetched based on the consent of the MSME, and we have built in data analytics tools to assess the probability of default based on these 3 sets of data which are available to us now because of the technological advancement. And the backtesting which we have done on more than 2 lakh records, 2 lakh customers, and the backtesting shows that this is a very good indicator of the probability of default. And if you use the fit rank along with the CMR score of CIBIL, it further refines the PD estimation and gives you a much better predictor of the probability of default. So we hope that this fit rank will be a huge enabler for the micro and small enterprises in availing credit from the formal banking sector. The other initiative that we have introduced or we are working on is the blockchain technology. Now the MFIs and the NBFCs in particular, they seek finance from various lenders. It could be SIDBI, it could be NABARD, it could be any of the commercial banks. The smaller NBFCs and MFIs also avail finance from the larger NBFCs. Now one challenge here is that when the refinance is provided to the MFIs and the NBFCs, the underlying security is the receivables from the loans which have been refinanced, right? Now there is a possibility of the same set of underlying loans being offered as security to various lenders, and this has been one of the main concerns of the lending fraternity so far. So what we are doing is we are working on a product with using blockchain, where the security interests will be tagged to the lender or the security interest holder through blockchain technology. This will avoid any duplication of security interests on the same set of assets. So this again we are working with the IBA, and we hope to launch this soon. There are several other initiatives, but these were the main ones which I thought I would like to share with you. To conclude, I wish to highlight that since 2011, RBI has been defining various boundaries for the MFIs and brought in stricter forms of compliances in line with the series of regulations put forth by the RBI for the betterment and sustainability of the microfinance ecosystem. The new set of regulations announced by RBI in March 2022 is another step in the right direction to ensure that all fair practices are adopted in reaching out to this important sector of the economy so as to ensure its sustainability in the long run. I'm sure you are all aware of the revised guidelines of the RBI, because I very distinctly remember that this was the main topic for discussion in the previous AMFI event that you had in April 2022. India has created a highly successful and user-friendly and safe digital infrastructure under India Stack, with enablers like Aadhaar, UPI payment system, GST, Open API system, regulatory sandbox framework, Open Credit Enablement Network, OCEN, account aggregator framework, etc. All this is increasing the pace of digitization of financial services, including credit delivery, with the microfinance sector poised for a significant rebound in terms of growth in portfolio and outreach in the next 3 years. Adoption of digitization of complete operations of the MFIs would only act as a strong platform for reaching this goal. I would therefore urge that MFIs, especially the small MFIs, to proactively adopt the changes that are happening in the sector, particularly digitization, and scale greater heights in the years to come. I'm sure in today's summit, the need for adoption of digital technology by the MFIs will be discussed and debated at length, and the way forward for developing a progressive and resilient microfinance ecosystem that will be of both impact and scale will be evolved. With these words, I would like to conclude my address and once again thank the organizers for giving me the opportunity to be part of this important event. I wish the event great success. Thank you very much.
Thank you so much, Mr. Mondal. It's heartening to know all the cutting edge work that you're doing at SIDBI. Thank you so much. May I now request you and your colleagues, Mr. Saurabh Bajpai, DGM from SIDBI Delhi, to please come up to announce a special project, Mr. Mondal, that SIDBI is doing with AMFI. I would like to announce, please come up, and I would also request the board members of AMFI to please come up. So I would like to announce there is a special program that SIDBI is launching with AMFI West Bengal. It is called We Lead, the Women Entrepreneurship Livelihood Enhancement and Development Program. So, the We Lead program is aiming to promote 1,000 women entrepreneurs from amongst the SHG and JLG members through enterprise and skill development, training and business development services in West Bengal. The sanction letter is being handed over currently, and wishing the program great success. May I? Thank you. Thank you. May I now invite Mr. Saurabh Bajpai? Uni Ashwin. Mr. Saurabh Bajpai to please come and say a few words and a few slides about the program.
Yeah, good morning all. Respected dignitaries on the dais, DMD sir and all. We are pleased to announce the We Lead program. We have sanctioned and we are planning to implement in the West Bengal in association with the AMFI West Bengal. Sir has already delivered the sanction letter, handed over to the AMFI. So I will just tell about the salient features of the program, the We Lead program. The We Lead is a women entrepreneurship program that's for the livelihood and enhancement of the and development. It's for the unserved and underserved regions, which are always the SIDBI's priority. We believe in testing and validating new ideas and innovation with the credible partners. So this program, in fact, we started in the Odisha with OSAFI, that's the Microfinance Association in the Odisha, and we tested it there, and now we are implementing in partnership with the AMFI. We aim at the innovating for a wider impact and to benefit the bottom of the pyramid in both setting up and stepping up. So like setting up, this program is basically for the members of the SHGs and the JLG. The model is basically SHG to ME model. So setting up part has already been undertaken, like we know throughout the years. So now this is the time for the stepping up. So this program is to step up the SHG members to the next micro entrepreneurship level. SIDBI continuously enhancing the community outreach, business processes and ESG compliances, and our multi-dimensional approach to support micro entrepreneurship and MSME sector will always be there. So we adopted this initiative, I told you, for transforming women entrepreneurs into the micro entrepreneurs. So this is basically the SIDBI and AMFI partnership. SIDBI is partnering with the AMFI West Bengal for supporting entrepreneurship, the women entrepreneurship. As I told you, the facilitating it need based and market-oriented skill development trainings, and it's timely. The main focus will be the timely and accessible credit facilities for the women entrepreneurship. So we request all the member associations of the AMFI, they have to take the active part in that. And like AMFI has also ensured that at least 15 of their members will be actively involved in this. So our special focus will be for enhancing the women's income through the enterprise development module. Next, please. So this is the We Lead program in per se. So it's a 2 years intervention. So the total target is 6 districts we are targeting, out of which 6 are the aspirational, 3 of them are the aspirational districts. The 6 districts are Birbhum, Nadia, South Dinajpur, Bankura, South 24 Parganas and Howrah. A special focus will be on poor and marginalized communities of these 6 districts, and our priority has always been the northeastern and poorer regions, and in the same continuation, we are targeting it, the West Bengal district now after the Odisha. Next, please. So these are the main features. We are covering 12,000 women who will be sensitized and aware about the program, out of which 10,000 women will be the potential entrepreneurs which will be developed under this project. We are focusing 1200 JLG SHGs which will be identified by the AMFI and its member organizations, and we are targeting that at least 12 crore credit will be channelized to these 10,000 women. Then sensitization, the process will be sensitization, and then the market linkage and credit linkage will also be part of that. And we are also targeting to develop a real-time Android-based, web-based monitoring system for the project. So these are the project impact which we are envisaging. It will be first training module will be developed by the AMFI, and then we are also targeting 12,000 women which will be orientated, as I told you, and 10,000 will be the potential entrepreneurs. 5,000 each year we are targeting. And the another thing is we are targeting, at least 5,000, means out of these 10,000, 5,000 will be totally new entrepreneurs. And then average income of these women entrepreneurs we are targeting will be increased at least by 30 to 50% depending upon they are new or they are the existing. Then periodically at least 6 buyer-sellers interface will also be arranged by the AMFI. So that means like, they have started entrepreneurship, they have started manufacturing their product, but then what to sell about. So for that, market linkage is to be established. It will be based for micro and small enterprise growth and employment opportunities for aspiring entrepreneurs and youths. And I would also like to thank our partner FCDO. In fact, all of you may be aware about the PSIG program, Poor State Inclusive Growth Program, which should be run with the help of DFID from till 2020, from 2012 to 2020. So, carrying forward the legacy of that strong PSIG program, we have SIDBI has created SRF, that is the Solomon Resources Facility at our New Delhi office. So under SRF only we are implementing this program with the help of the FCDO. So I am thankful to the FCDO, AMFI and all the AMFI members, and all the best for this program and Microfinance Congress. Thanks you.
Thank you, Mr. Bajpai, and thank you to SIDBI for this awesome program that we put together. I would now like to invite Dr. Alok Mishra, CEO and Director at Microfinance Institutions Network, MFIN, to please come and share a few words. Ladies and gentlemen, please put your hands together to welcome Dr. Mishra on stage.
A very good morning to all of you, my seniors and colleagues on the dais and off the dais. I would not get into a longish speech because the time for the session is, I think, 11:30, and there are already many speakers to speak. But a few things and a few important things I would like to crystallize and leave it to you. We hold conferences like this frequently. There are state meetings, there are national meetings, and the primary focus of it is that how do we achieve the goal of inclusion, the goal of financial inclusion, goal of access to finance. And this is not a new objective because if you see India's development policy since 1950, when India became independent, the focus of the government and Reserve Bank had been on financial inclusion. Before 69, it was, the states have changed, of course. Earlier it was on cooperatives, then it went to banks nationalization, then after financial sector liberalization, SHGs and MFIs have come. But still, after doing so much, I think we are nearly 70 years down that line, and if you look at the surveys, the share of formal sector agencies where there will be banks, MFIs, NBFCs, SFBs had stagnated at around 65% in the cash debt of Indian households. It went up to 65% in 1991, and since then it has remained more or less there. So, you would say that it has remained so for 30 years. We are doing our bit, what more and what next can be done, and what is important. So, to me, this conference, not that it is a cliched thing, it comes as a very opportune time. And why so? Because of the factor which I call as the DRR, the factor which has changed the financial inclusion landscape in India, and that is the coming together of three aspects. That is the DRR. The D stands for data, R stands for regulation, and the another R stands for the regulatory rails. All these three, for the first time, I think if you look at last 50, 60 years, have become very conducive for achieving the financial inclusion. On the data side, the credit bureau records of 10 crore clients are already there. Deep diving of that data is possible. Other initiatives which have been talked about, like the development of OCEN, the development of ONDC, account aggregator, JAM Trinity, and so many things, so many innovations have happened. Payment have become so smooth that we could not have imagined 5 years back that 100% of our clients will get loan disbursement in the bank account, and around 30% will also start paying digitally. It was not imaginable. So, all these things have happened, and data gives us power, and data gives us strength to do predictive analysis. So, enough data is there, and I think we are the world leaders in terms of data and the infrastructure which we have. The second part of it is the regulatory infrastructure. So, the regulation has also become very conducive from a very price focused and a very constricted view of the microfinance space. It has moved to a broader principles based approach, allowing freedom to the institutions to operate, allowing their boards the the flexibility and competence to decide on policies, and a tolerance for all sorts of players. Earlier it was, if you remember even 10 years back, if you look at the finer shades of Reserve Bank's policy, it was that yes, this part will continue, but our focus will be bank-led. But now that the acceptance has come that all channels need to play their part in fulfilling the inclusion dream. The third part of it, I would also say, is on the rail side, that innovations, there are plenty of innovations which have happened, and we are not able to tap the potential of every one of them. For example, now the new initiative which has started from Government of India, which Mr. DMD Sidbi was talking about, was the registration of all the micro enterprise customers under Udyam number, which will lead to formalization. How will it help and what it will do, we will see, but there is enormous potential. So, all the three factors have come together, what I call the DRR matrix. At the same time, when they have come together, the challenge remains large, because we see that microfinance portfolio has reached 3 lakh crores, banks have lent this much, this has happened under this scheme and that scheme, but still there is huge potential. And I would try to show you a few data points to say that how much market is available. At MFIN, when we tried to analyze the data which is there in our publication we released in November, Micro Matters, Macroview, we said that the microfinance market itself currently is around 10 lakh crores. We are serving 3 lakh crores, around 30%. And by 25, it is supposed to grow to around 25 lakh crores. Now, you may say that's your assumption, that's this, others may not agree. But if you see the other government sources or other credible sources also, the figures comes around to that point of view. I would take you back to 2018, NABARD's Financial Inclusion Survey. It says that only 22.7%, which is almost near 30%, a little less than 30%, households in India, rural households, had MFI loans. So that means 80% did not have. Second part of it comes from more recent study, government study, All India Debt and Investment Survey 2019. It says only 17% rural households had incidence of indebtedness from formal sector agencies. So I would say roughly put together all these different figures, different sample sizes, different methodology, that the market which we have reached is around only 30%. Still 70% market is there, huge market is there. There is nothing like overheating or something. Maybe in one place it would have happened, but as a country there is enough scope. The ecosystem has become very friendly, tools are there. So this is high time it looks like we are about the cusp of solving this inclusion riddle, though it will be a tough task ahead. So when I talk about this opportunity, the proper landscaping and the market opportunity, it is all not gung-ho. We have to also, when we go there, we also have to keep into mind basic factors which I keep emphasizing on forums after forums. Otherwise, we will not be there. So I would not list all of them, but I would list 3-4 key points. One, the most important point is that whether it is regulation or it is code of conduct developed by the industry, we must all come together and try to see that we try to follow it in letter and spirit. Regulator or SRO can only do that much. It is the institutions which have to take the responsibility. The policy has given us trust, and it is time for the sector to redeem that trust. And we can do that only by following that in letter and spirit. Second part of it, I always say that if you look at the sector, earlier, at least for NBFC MFIs, I would say the common refrain was that we cannot do much beyond a cookie cutter product because we are under tight regulation. Now that barrier has been taken away. Now when we go into a market and we go to a district level, we see 30 players operating in that market, we have to ensure that not all competes on same thing, because there is a theory of comparative advantage, because some product differentiation, service differentiation, now the regulation allows for that differentiation, some pricing differentiation, various types of combinations are possible. Try to go to a place where you have some comparative advantage and not all doing same thing. At a client level, now it has become so confusing at some places that the client doesn't know even the name of the institution. The client says, I have borrowed this money from this institution or something. Very difficult. So try to have a differentiated offering. That is the second thing. The third thing is, which everybody talks about, but I would echo Ghosda's views. I am on his side in that point, that everybody, wherever you go nowadays, you will talk about digital, fintech, AI, ML and all those things. But I would say the clients which we serve, clients and the segments which we serve, it cannot be a pure digital future. It will be an enabler, it will be a bionic future where you have to merge your human capabilities with the digital capabilities. You cannot leave everything on that. We are seeing what is happening on those platform lenders and website lenders and what has happened. We have to be very cautious about that. We don't lose this human connect. And the final point I want to say is that microfinance has emerged as a robust tool. We are serving around 6 crore clients, unique borrowers with 3 lakh crore portfolio, but the market is huge. But we should not forget what were the basics of microfinance. I think everybody would agree to that. Now, when we go to the field, because of this digital payment, digital repayments and COVID impact and all that, I see that the basic discipline of microfinance is a bit lacking. The group cohesion is lacking. The group meetings take place, but the center attendance is not there. In digital payments, that cohesion is not building back. So I think we at MFIN, we are trying to build a program. We'll take all of your support, that how do we start focusing back on the basics also. Yes, we will adopt the new things, we'll adopt the digital technologies, but we have to focus on that. So with these 4 things, I think the future is bright. We should stick to all these core principles and try to solve the inclusion puzzle of India and help the government in building an inclusive India. Thank you all, and thank you, MFIN.
Thank you, Dr. Mishra. Indeed, the Indian microfinance industry has come a long way, and we still have a long way to go. May I please request the delegates at the back of the hall to please take their seats while the session is in progress. Thank you. I would now like to invite Mr. G.G. Mamen, Executive Director from Sadhan, to please come and share a few words with us.
Thank you, everyone. Good morning to all of you. Respected dignitaries on the dais, off the dais, and dear friends. Let me first of all thank Maiti Sahab and Asit ji for inviting us for this conference here. And for me personally, it gives me a lot of pleasure because this is the 4th one I am attending out of this 7, maybe in different capacities. Last year also I was here, I was fortunate to be here in a different capacity, but I am happy that I am here with you in this conference for this 7th Eastern India Microfinance Summit. In fact, we are meeting at a time when industry has passed the major challenge which we had in the last 2 years of COVID, and the sector has come back to almost near normalcy. And this is a time when for us to look back and also to see forward, how do we go forward, and also addressing any such issues which can happen in the sector at any point of time. We had been seeing such disturbances in the past also, in one way or other. It could be in the way of a policy change, it could be in the way of some natural calamity, or it could be in the form of some kind of interventions happening in different points, and also a pandemic. We have gone through all this and we have reached a level where the sector has become much more stronger and matured. The way the sector has come out of this COVID pandemic impacted problems in such a short time shows the resilience of the sector. And I really salute the entire microfinance team, especially those in the field. They are the real warriors of the microfinance sector, and it's a really commendable job which all of us have done, and we should be really proud of that. Only my point is that we should be alert to the situations around. In fact, I was seeing the data, especially with regards to West Bengal. West Bengal has been a leading state as far as the microfinance is concerned in the last almost 10 years. There has been a huge build-up of portfolio happened, and suddenly you find some kind of a corrections happening. In fact, it was around 28,000 crore at the end of March. Today we find around 24,000, 25,000 crores of portfolio, which means some correction is being taking place. It's a real good thing which is happening. That's what I should say. Because if you see the statistics, out of 25 top districts, 9 districts are from West Bengal. Out of 12 districts with more than 2,000 plus portfolio in a district, 6 are from West Bengal, which means there has been some kind of a concentrations happened in certain part of the state, in certain districts. Probably it's time for us to move into different other geographies. The statistics also says that 9 districts accounts for 67% of the portfolio as far as the state is concerned, which means the 14 districts account for only 33%. There is a huge gap available. In fact, if you see this country as a whole, this imbalance has been there. We know that the data says that 10 states account for 83% of the portfolio, and 5 states account for 56%, which means the remaining states are still not been fully covered. So as my earlier speaker said, there's a huge potential available to us. Only thing is that we need to see where we need to go, where we have to move into, and how do we expand our business. There should not be a jostling happening in the same sphere where already the players are there and it is already reached a kind of a saturation. So if you keep this in mind, I'm sure the sector can really grow, and the potential is quite huge. And no matter whatsoever problems come in the way, I'm sure we will be in a position to overcome that, come out of it, and ensure that things are going well. The topic for today's discussion is about the technology. I'm sure technology is going to play a major role. But as Alok said, or even Gosda said, the microfinance is a high-touch activity. We cannot substitute that with entirely technology. If it happens, it will become a fintech kind of a job, fintech kind of a financing. We need to continue our field level touch and also use the best of the technology. That's what we should be going forward. The first thing we need to do is to have a kind of a e-KYC practiced across the border, across the sector. If that has happened, I'm happy that RBI has given approval permission to some of the MFIs to go into the eKYC mode. I would say that it should be applicable to everyone. This will help in deduplication of borrowers. It will help in avoiding the fraudulent persons. So that is the first step I think we need to go into. Other kind of the requirements of technology, whatever is available, we should make best use of it. But then the field touch, the connect with the people has to be there. But let me also tell you one thing. I was just analyzing the data of the recovery pattern during the COVID period. To my surprise, I was really happy to see that the smaller MFIs have done better as far as the recovery is even during the COVID period. I feel this is mainly because of the connect with the people, because maybe they are small, they are regional, they are confined to a specific geography, so the connect is much better. And let me tell you, that is what really which matters. So let's be, the potential is available to us. There is a large area for us to play, or for us to do our business. If you are mindful of what is happening around, if you are mindful of the requirement of the sector, if you are mindful about the code of conduct which has been given by the industry, I am sure sector will not have any problem going forward. So with this, let me conclude here. I am sure we have a huge way to go forward. We have a huge opportunity to go forward, and let us all come together with one mind and ensure that we take care of the interest of the industry and not the personal interest, not the individual interest. It's a sector as a whole. In fact, yesterday I was really happy to hear that one of our colleagues who is sitting here, when I was interacting with him, they were saying that you have an understanding within the members, because that is really required, that if someone else has a default, the other person will not dare to finance that. That is the kind of attitude we should have. That is the kind of care we should have. I am sure with this we can definitely move forward. My best wishes to all of you. I wish all the best for today's conference. Thank you so much.
Thank you, Mr. Mamin. And indeed, if we work together, we can go far as an industry. I would now like to invite Srimati Deepmala Ghosh to please come on stage, onto the dais, and say a few words.
Namaskar, good morning. Namaskar, Shri Ajit Kumar Maiti, Chairperson AMFI, distinguished guests on the dais, and esteemed audience. One of the advantages of speaking after the giants is that a lot of has been said, and so not much needs to be said by me. So I'll only stick to whatever is my experience with NABARD. Now, Mr. Chandrasekhar Ghosh has already mentioned that microfinance has now 6 crore borrowers, and its multiplier effect in creating employment. Dr. Mishra was mentioning that only 17% of India's households are indebted to the institutional sources. So there you have the vast potential for microfinance. Now coming to the role of digital technology, the Center for Research for Financial Inclusion and Microfinance, which is housed in BIRD, did a study of a few MFIs last year on the level of digitization. We did the study with Satya, Muthoot and Fusion. Now these are all large MFIs. And we found that they have made a lot of investment in their digital infrastructures. They are almost all the processes are automated. They also have built apps, Satya Connect, Mahila Mitra, and they are using that for repayments. But if you look at the data, only 10 to 15% of the repayments are happening in the digital mode. That is Sadhan report I am quoting. So that's because for smaller MFIs, it is very difficult to make that much of investment in digital infrastructure. So I feel that instead of reinventing the wheel and making so much of investment in digital infrastructure for repayment purposes, they can always use the partnership network of many of the fintechs who are offering, cash management services. The telecom companies are offering their CSPs where you can use the cash drop facility. Then there's all these options of QR code based loan cards, which both Satya and Muthoot and probably all large MFIs are now using, BBPS, UPI. So these can be, instead of, use the partner network for smaller MFIs for use the digital technology in their operations. Secondly, we found that the MFIs, most of the borrowers, or rather the beauty of the MFI sector is that their borrowers are all women. But the ownership of smartphones is not with them. It is mostly owned by their husbands or their sons. And all the repayment options are mostly smartphone based. So there is a need to educate them to use this UPI 123, UPI Lite, any other feature phone based repayment options. That is one thing I think the MFI sector should be working on. The other thing that I felt was that I was going through your annual report, and since this seminar comes right on the back of the COVID, recoveries have been a big problem because people have suffered, particularly those borrowers who are engaged with events like festivals and celebrations, the flower vendors, the zari embroidery and clothing industry workers. And whatever little they had, they spent it on their treatment and their daily needs. So now with digital technology, there are a lot of insurtechs who are offering very small sachet-sized insurance products. Sachet-sized, I mean very, very specific insurance products aimed at for dengue, malaria and things, or any planned medical expenditures. So what the MFIs can do, you can partner with them and offer these credit plus services to your borrowers so that they do not take loans for paying for their other natural calamities or health. The other thing that we feel is that savings is traditionally the best form of insurance. But for migrant laborers, for gig workers, parking their meager savings is another problem. So there are also many fintech companies. Even Google is offering FDs booked through their Google GPay apps. So if you can partner with those companies and offer your customers these very, very small savings which are very specific for say a dental procedure or for any educational purposes, you do not let them divert their productive loans for these purposes, which I feel would help the industry in the long way. And the third thing, which is very dear to NABARD's heart, is women entrepreneurs. We also work with them. We also train them through our micro enterprise development programs and livelihood and entrepreneurship development programs. But graduating them from subsistence to a sustainable living is very difficult. Not just credit, they need a lot of hand-holding. Even the credit that the industry offers is very, very meager. I'm sorry to say, sir, I was just going through the We Lead program. 12 crore credit to 12,000 borrowers means 10,000 rupees per head, which doesn't really help in the long run. So one thing I would request all the microfinance, lenders is try to graduate your entrepreneurs to a more sustainable way of living through greater doses of credit, and that can come only if you offer them more hand-holding and other services. NABARD, SIDBI, we are all there, and I think we can work together and make that happen. With these words, thank you so much for giving me this opportunity to speak.
Thank you, ma'am. I would now like to invite our esteemed guest from Bangladesh. May I have Mr. Shri Mohammad Abdul Awal, Executive Director, Credit and Development Forum, CDF, Bangladesh, to please come to the dais and share a few words with us.
বাংলাদেশ শুরু করি মনে হচ্ছে আমি বাংলাদেশী আছি like pupils in Bangladesh who have been working with microcredit, you also look like the Bangladeshi people. Epar Bangla, Upar Bangla. আসুন সবাই বলি সুপ্রভাত কলকাতা আমার সাথে বলুন গুড মর্নিং কলকাতা জোরে লাঞ্চ আছে তো সামনে হ্যাঁ ওকে থ্যাংক ইউ ভেরি মাচ মিস্টার অজিত মাইতি চেয়ারপারসন অ্যাসোসিয়েশন অফ মাইক্রোফিন্যান্স ওয়েস্ট বেঙ্গল Mr. Chandrasekhar Ghosh, Shekhar-da, Managing Director, Bandhan Bank. Keynote speaker, Mr. Sudatta Mandal, DMD SIDBI, my colleague on South Asia Microfinance Network, SAMON, Mr. Alok Sharma. his immediate past chairperson of SAMUL, my other colleague, Chief Executive Officer of Shadhan, and other people, and I have another compatriot from Bangladesh, Mr. Enamul Haq. You know, he's Chief Operating Officer of Asha International, Kolkata, and Anjanda, last but not least, Mr. Asit Kumar Moitro, a very smart person in coordination. Thank you very much. Good morning. I am really honored to have been here, the city of joy, Kolkata, today, with love and respect from the huge and vibrant microfinance industry of Bangladesh. My organization, Credit and Development Forum, has been the oldest and the largest network of microfinance, not only in Bangladesh, but also in the world. With 850 microfinance institutions licensed with Microcredit Regulatory Authority, MRA, including BRAC, ASHA, Bureau Bangladesh, TMSS, these big MFIs, and other small and medium MFIs working cross country. CDA was born in the year 1992 to perform 4 core objectives. Number 1, building the capacity of the sector. Number 2, undertaking lobbying advocacy research on different issues and emerging issues. Number 3, acting as a center of excellence for information dissemination. Number 4 is facilitating the member MFI's access to different source of fund. It's very challenging. Bangladesh, you know, is affectionately called world's capital of microfinance. Other countries are simply provinces, states. For its innovations of microfinance. The MFIs in Bangladesh provide financial services like savings, credit, and other financial, social, and human development services to more than 43 million people, poor people, low-income members, and micro-enterprises, having total outstanding of US $10.7 billion and a savings portfolio of nearly US $5.5 billion. Credit services to the microfinance sector are categorized into 7 groups. We provide general microcredit, what we mean, which is self-employment and income generation based, micro-enterprise loans, loans for the ultra-poor, agricultural loans, seasonal loans, loans for disaster management, livelihood improvement loans, and water, sanitation, and hygiene loan. A loan amount is generally considered microcredit up to US $481. It's the amount 50,000 in Bangladesh currency. Loans above that amount are counted as micro-enterprise in Bangladesh. Nearly 90.85% of the microfinance members are women, and 65% of the microfinance operations occur in rural areas. As of June 2021, the total number of MFIs licensed with Microcredit Regulatory Authority, it may be noted that MRA came into being in the year 2003 through passing an act in the Parliament of Bangladesh. And we have, the MFIs have a huge network of more than 22,000 branches and 266,000 employees are working over there. To create a widespread and sustainable development impairs, the microfinance sector in Bangladesh has evolved with significant transformation from group-based limited scale microcredit operation to the individual micro enterprises operations over the years. Throughout these years, microcredit has graduated from its mainstream activity of supporting the basic need of the poor people to nurturing broader farm and non-farm activities, as well as micro enterprises of the graduating clients and the micro entrepreneurs. The focus on microfinance through scaling up credit to meet the threshold level of the activities for generating sustainable livelihoods, along with targeting the extremely poor groups and the remote areas, mobilizing the poor for promoting social development, creating awareness on health, education, women empowerment, climate change, and other social issues, providing access to technologies and decent income generating opportunities. HUGE has provided the MFIs a unique opportunity to emerge as important partners of development in Bangladesh, particularly during the catastrophes, the natural or man-made, such as COVID-19 pandemic and the recent Russia-Ukraine war. In Bangladesh, many poor people and micro entrepreneurs rely on various financial services offered by the microfinance institutions, including credit, as I said before, savings, remittance delivery, loan insurance, etc., most of whom were financially excluded before their engagement with the microfinance sector. As a result, the source of financing of MFI's operations has broadened over time to include loanable funds from several sources, such as savings collected from the members' cumulative net surplus, borrowing from the commercial banks, concessional loans received from a source such as the government-established wholesale lending agency. You have heard about PKSF, loan from non-institutional sources, for example, the board and client members, and other sources such as reserve fund, staff security fund, loan loss provision fund, and others, for example, the funds from the donors, currently almost zero, government sources, welfare fund, and depreciation fund, and the emergency fund. Overall, the most important source of funds for the MFIs at the aggregate level of members' clients is members' clients' savings. Nearly this savings is supporting the revolving loan fund up to the extent of 43.49%, followed by cumulative net surplus amount to 31.63%, and borrowings from the banks about 19%. Wholesale loans from commercial sources, the state-owned and the publicly owned banks, NBFIs, have been on the increase every year. In contrast, for the cheaper loan from the government-established wholesale lending agency, Political Foundation remains the primary source of fund to many MFIs. Out of a total credit disbursement of $15.5 billion in 2021 by the MFIs, $8.5 billion amount, 54.43% was microcredit, $5.2 billion amount, 32.26% was micro enterprise loan. At the same time, the remaining $2 billion, 12.31% was credited for other activities such as agricultural loans, seasonal loans, ultra poor, disaster, social development, and other purposes. Assessment made by different research agencies revealed microfinance contribution to the nation's GDP as around 17%. MFIs in Bangladesh have unequivocally impacted the lives of the millions of people living in low income bracket households, but digitization was not a priority in the sector until the last decade. We are a little bit lagging behind. Transforming needs of its main client base and the technology leapfrogging ability of the general populace is influencing MFIs to rethink their operations and how digitization could create access for them beyond their traditional challenge, and how it could also positively impact the lives of the millions of borrowers. MFI's two main operations, loan disbursement and the savings, loan collection and loan disbursements are the points where digitization creates the greatest impact. Transaction digitization in the MFI sector has emerged mostly in two forms, and the form is mobile financial services, MFS, and the banking services. Both of these services are often referred to in the industry as mobile money. Digital savings is also a main target service of MFIs and is strong incentive behind digitizing transactions. Transaction digitization is a fairly new concept for most MFIs, but not an alien one. MFIs acknowledge the ability of transaction digitization to create greater efficiency and transparency, and also recognize that digitization is beneficial for their clients as well. Data reveals around 47% of the Bangladeshi adults are financially included, with 70% having a registered mobile money account, 25% with a full service bank account, and 23% with a full service non-bank financial institutions, which also includes the MFIs. These figures show encouraging leaps in financial inclusion and technology adaptability of the population. Among benefits such as increased efficiency and cost savings, women's empowerment is an instrumental decision-making factor for MFIs digitizing transactions. Around 80% of the women in rural areas now have an active digital stored value account, which means that they have money in a digital format. Of the 47% of the adults considered to be financially included, that is, having an account with an institution that provides a full suite of financial service, 80% are women with a low income. Of the unregistered mobile money user base that conducts over-the-counter transaction without a registered account, and 40% of them, 40% are women. This shows women are adapting to digital money first, and there is an opportunity here for MFIs to help millions of women utilize the benefits of digital money to better their lives. MFIs that have piloted transaction digitization, like BRAC, Bureau Bangladesh, the ASHA has been the largest MFI at the moment in the world, and BRAC is the largest NGO in the world. They have piloted transaction digitization, have experienced a lot of positive reviews from women clients. According to respondents from MFI, transaction digitization has enabled women to track their savings and spending without having to log them in a notebook. I'm taking more time. I'll finish in 2 minutes. Right? Okay, thank you. Because you are looking at me, staring at me. The women save without having to worry about security compared to cash. Spend more time in the business, less time traveling for payments. Promote the product to other women borrowers in the community. Other women borrowers started requesting digital payment options instead of cash and digitizing their money. In general, created a sense of empowerment among the women clients in the community. Of the total 43 million microfinance MFI members, 30 million are women in Bangladesh, and in the financial year 2021, around 31 million borrowers received a loan, of which approximately 30 million were women. Given the positive benefits experienced by women borrowers in pilot program, this is an immense opportunity for the MFIs to transform the lives of the millions of women business owners in Bangladesh by just digitizing their transactions. Microfinance institutions that have piloted transaction digitization have viewed the major benefits to the change as a digitizing transaction. Loan collection, number one, loan collection process on an average 2.5 hours now takes around 30 minutes, from 2.5 hours to 30 minutes. Cash management, 30% time saved in cash management. Loan disbursement, MFIs could complete loan disbursement in a matter of 2 hours on average, a task that would take before a whole working day. And processing documents, digitization has saved time in data entry, file management. In BRAC's pilot program, an average of US dollar 179,000 was saved on paper and printing in a year. Increase internal control, drastically reducing malpractices in pilot branches, and increases accessibility as credit officers are now free to pursue business development in unexplored areas. Digitizing the transactions mean that some of the credit officers' duties were obsolete, and now they could be utilized to target new client segments and regions. Meets consumer demands as clients now request digital payment options. On average, they can save the least US dollar 3 monthly on travel costs by opening to pay digitally. We have some challenges. I will be running through. We have some operational challenges, include increased cost due to the additional charges for digital transaction and a need for IT infrastructure. Increasing the volume of business is the best solution to recuperating some of the cost. Management challenges in the form of solutions of some of the credit officers' tasks in a challenge expressed by all the MFIs. However, they believe this can be solved by transforming the general activities of credit officers and redesigning other center meetings. Center level challenges due to lower accountability of clients to pay after digitization is a fear expressed by MFIs. Low technical literacy of clients is also a practical challenge to digitizing transformations. Lastly, regularity challenge in the form of cash out ceiling of US dollar 240 per day for DFS accounts is a significant roadblock to using digital transactions for disbursement. On average, an MFI loan size could be from US dollar 481 to US dollar 960, and a client would have to visit the agent or the ATM booth for 2 days if they wanted to withdraw US dollar 961. This is not an efficient system. Yes. No. Okay. Thank you very much for your patience. I will finish in 2 minutes. The digital transformation is still a long way to go, and the growth in the past few years in Bangladesh is admirable. MFI should not consider this is a cost, rather an investment for the figure to to enhance operational, administrative, and financial efficiencies. MFI's partners can recognize the potential of the microfinance sector and revise their transactions fees to more affordable rates, which is extremely at 1%. As a high-touch sector, it is anticipated that the MFIs will train their field forces to build digital transaction in order to have more time visiting more. It's over. It's long. I am traveling from Bangladesh, so it is almost an overseas. So I have many things to share with you. But last I look forward to some sort of partnership. I think Upper Bangla, Upper Bangla, we can sign an agreement between two Banglas, MP and CDF, for exchange visit and sharing our both countries' experiences. Thank you very much for your experience.
Thank you, sir. Ladies and gentlemen, we're running a little behind on time, so we'll quickly move on to our next speaker. May I please invite Mohammad Enamul Haq, COO of Asha International Dhaka, to please come to the dais.
Honorable Chairperson of this today session of 7th Eastern Indian Microfinance Summit 2023, and distinguished guests and speaker who are in the podium, and our most of the CEOs and practitioners, lenders, and the investors, regulators, and networking. Lot of representatives over here. So, good morning. So, I think everyone is very tired because inauguration session took near about 3 hours. It's really unexpected. So anyway, so I don't like to go through whatever I have planned. Yesterday we have a good session with the few leaders of Eastern sector who are leading this sector. We have a very good discussion on what is the advantage and disadvantage in Bangladesh microfinance sector as well as about India. So after we comparison, we can got very beautiful scenario of both of our entities. India has some excellence as well as few limitations. Simultaneously, Bangladesh also, there is a good advantage as well as some limitations. So I'll take 2 minutes to present this few highlights of this. If you think about this coverage, the India coverage almost double than Bangladesh. Bangladesh covered 3 crore, India covered 6 crore. On the other hand, if you consider this population coverage, India covered around 20% of the total population, but Bangladesh covered almost 50 to 60% of the total nation. Number 2, that if you consider its portfolio, our loan outstanding is around 1 lakh crore plus, but you have 3 lakh crore plus. So 2 times higher than Bangladesh. So portfolio is very big in India. Number 3, as Mr. Shekhar said, that each and every year you are covering near about 60 lakh new clients. I think if this trend is continue within a couple of years, you can reach 50 to 60% of the total nation. And I have seen that this national growth, it is almost 4% contribution directly from the MFI in India. That is very remarkable. If this gross national productivity is contribution 4%, I think it's a very remarkable contribution for whole nation. So few highlights of this. India is very ahead of us, especially in the technology. Number 2, Indian CIB is very strong in here. So to know how they offer in-depthness, it is very useful tools for the sector. Number 3, there is the portfolio almost 3 times higher than Bangladesh. And this year, I have seen that with a bad situation in the world, inflation, depreciation, Russia, Ukraine war, COVID, overcome this after COVID, pre-COVID situation until it's a 20% growth. I think if I compare it the world, I think India's growth number is number one. So 20% growth in a year, it is not a matter of joke. And if this trend is continue, I think within couple of years you can reach, maximize your outreach. Number three, there is a diversified intervention in here in microfinance. First one, self-help group. That is very actively working in here for microfinance. Number two, NBFC. Good number of NBFC also working over there. Bank also contributing more. Then cooperative also working over here. Then small microfinance also working over here. And then BC model is another innovation globally now. Other world also thinking about this BC model. Then securitization also in here. Then FDI, foreign direct investment, and the ownership of the company. It is in here. But Bangladesh have a few good advantages, remittance. Near about 1 crore people in Bangladesh who are working abroad, they can send money through NGOs. So easily they can reach from their home. Remittance, it is very rare, but NGOs are allowed. Number two, we have an MRI, complete separate regulatory body. They are directly supervised by the microfinance and issues a license. Number two. Number three, savings. Mr. Awal has said near about 60,000 crore of savings. People, poor people, they saved us 60,000 crore. Almost 50% of our loan portfolio contribution come from this microfinance. But India, until it is not allowed to take as a cash security or whatever it is. Number three, so insurance. Even we are allowed to take loan linked insurance managed by ourselves. But India, if you want to take any service from insurance, you need to agreement with the existing setup established insurance company. But we don't need for any insurance company. We can insure to our client. If it's a death, outstanding loan will be written off, and we will give lump sum money to them, and for the funeral and other costs. That is also another initiative. That's why I would like to request to who are in here the networking. So if we have the government level relation in between Bangladesh and India, it is the highest form. Why not our level? So that's why I would like to request Mr. Awal Bhai and MP West Bengal as well as this national sector, networking sector, if you have a bilateral agreement, if you decided to knowledge transfer, experience sharing, regulatory kinds of things, and then I think if each and every year we set 100 people will be visit Bangladesh, 100 people from Bangladesh will be visiting here to see, know how each other. This way, if you make a one agreement, this will be good thing, I think, in future. So number three, that now I'd like to one innovation. One, that in the poor people, they are mostly deprived due to the middlemen. The poor people, they are some buyer, they are also some seller. So there is a middleman who can take good amount of money due to the business handling. If you established one marketplace, you will be bridging among this, between this buyer and seller. Then the producer will get good price and seller will get the goods from their home. It is we established in Ghana, and very shortly we hope to execution on this. So there is a new innovation we are thinking about this micro, that is called marketplace. And considering this digitalization, ASA International decided to digitalization by T24 by Temunas. Within next 5 years, we make a strategy, all 13 entities should be digitalized. So there is no doubt, there is a lot of research. Very recently, Mr. Mamun, PwC, made on one research, and he research has proven that productivity, outreach of the business, it will go double from existing if it is digitalized. So why not digitalize? But remind it that digitalization is not the ultimate solution. So that's why my recommendation will be human touch, to know the poor people's situation, to make a commitment as an institution. Without human touch, it's not possible. So digitalization we need, but simultaneously don't forget that the human touch with the poor people, human touch with the women, human touch with the society, this will also very important. If from tomorrow we decided no weekly meeting will be held, what will be the situation? No monthly meeting will be held, what will be the situation? I think everything will be failed. So that's why digitalization as well as our existing system, this is our legacy. Group meeting maybe instead of 4 weeks, let's try to decide, okay, let's try to start by twice in a month instead of weekly. Out of 4 weeks, let me start twice in a month. Then come to this once in a month. This way, so both should be continued. So I hope to the next session, if there is a scope to share my any ideas, this will be fine. So first of all, I would like to thank you, the West Bengal Microfinance Networking, for inviting me as a speaker, as a guest. I don't feel as a guest because since 2000, I was involved in the market. You know, Friends for Banking, Didi, she was organized to train this near about 20 MFI in Hyderabad. I was working there. And out of this, good number of institutes by this time they developed. Sorala, that is our partner. And I also exclusively working with Chandrasekhar Da during initial stage, expansion, how we can start the business. And now 2008, I am working as one of the board of directors of India. So don't tell me as a guest, I am in your people. I will be with you for longer time. Please pray for us. Thank you very much.
Thank you, Shri Haq. And before we move on to the unveiling of our knowledge paper, I would like to invite Mr. Manoj Nambiar on stage to please say a few words onto the dais.
Morning. If all of you are going to think that I'm going to take another half an hour to complete whatever I have to say, don't worry. I'm here just to summarize. I think setting the context for what we are here for today, I think is really the more important thing. The inaugural session just sets the context. And I'll just like to once again summarize what the previous speakers have said. In a country of 1.4 billion population, where we even today believe more than 40% of the people are target audience for microfinance, and whereas Alokji said hardly 30-35% supply is made available, you can understand the potential, whether it is a company, whether it is employees who work in the sector, and the tremendous opportunity that it gives us for us to serve the potential customers that we can actually look at. So I think the future is very bright, and the one thing that I'd like to leave behind before I move on is the fact that I took an Uber from my house in the morning to come here. It cost me exactly 430 rupees for a distance of about 16-17 kilometers. And that is really the future, that Uberization of credit, where that credit comes from, is going to be completely ubiquitous, and that's really where service, the price point at which you will get the service, and the fact that customer delight on the fact that you are able to do it in a very seamless way is really the future. So the paper intensive mode has moved into a midterm mode where I think people are struggling between paper and digital. Very soon, the sons and daughters of the customers that we deal with are going to deal with you on a smartphone, are going to deal with you on a very, very seamless mode, and we all have to be prepared for that. Otherwise, exactly what happened to the car rental companies when Uber came out is exactly what will happen to us. So with that thought, I'll leave you behind on the more exciting part of the inaugural session, which is, I think, release of both the papers. And do not forget to miss the 3:20 session, which I'm going to moderate, on how digital technology can essentially make a paradigm shift as far as the delivery of microfinance is concerned. Thank you very much.
Thank you, Mr. Nambiar. May I now request Sri Joydeep Roy, partner at PwC, to please come to the dais, share a few words, and of course release the thought leadership address. Thank you.
Well, it's just about to be afternoon, on the cusp of the afternoon. May I wish all of you good morning and good afternoon both. Always a pleasure to come back to the AMFI programs. This is my third time and out of the 7. So with due respects to everyone on stage, and you heard fantastic insights on the whole industry. And I think the release of the paper has been made at least 50% redundant, because a lot of these things which have been researched by us at PwC have already been covered by great addresses from Dr. Ghosh, Mr. Maiti, Mr. Nambiar, everybody. So without further ado, and in the interest of time, I'd just like to take you through some salient features and salient findings. Because in today's day and age, it is very funny that we're releasing a paper and in paper form. And therefore, it is important that we also talk about certain salient features and certain findings that we have got from here. So the paper consists of several sections, and this is a kind of a, please do treat this as a guide. The industry, how it has been, what is the current status, where is it going, how does it really, how is it aiding financial inclusion in all respects. Finally, the whole regulatory piece and the whole gamut of opportunities and challenges. It's just the onslaught of digital doesn't mean that everything has become easy. It has also become more complicated because of choices of technology, choices of interfaces, choices of processes. And a theme which you have heard through the morning, human technology, where does the human touch and the technological the interventions, where do they really converge? How do they really help people do things better, faster, simpler, and not get again lost in a mass of things that they have to do in addition? While the regulatory frameworks are evolving, and you just heard from Mr. Haq also that there is a separate regulator in Bangladesh. In India, it is a common regulator, but that also helps in looking at the entire value chain. So there are pros and cons of both, and you can be rest assured of so many regulatory reforms in the offing. Well, we have been hearing about India's growth, 24% CAGR over the last 3 years through the pandemic, and that's something I think the industry deserves a big hand for, because globally the industry has only grown by 11%. So that's something which all of you should be really, really proud about. The opportunity is huge. The opportunity is about globally $130 billion in the next couple of years is supposed to be the upside. How much of that gets disbursed in India is yet to be seen. But since we are here in Kolkata, I think that's another thing to be proud of is East and Northeast of India has a lion's share, 37% of the whole country's disbursement of microfinance. And that's something, again, which is makes me proud, having my origins here. So I will not go through all of these, but just the headings which the paper will cover. It will talk about the entire value chain and the aspects of customer acquisition, because in this business, lending business, acquisition is the gate through which you get in the better credit in, as well as help people. The whole underwriting, risk management functions, collections, always important, and finally fraud and product management. Product is where I think the innovation is required in the Indian market space, and the opportunities are galore with the fintechs, the alliances that can be made. Now, as we talk about the way forward themes in that, which would, I think, be more important than what it is today, when we talk of way forward, there are certain themes which have constantly hit us. And I will not talk about, in the interest of time, I'll just cover or draw your attention to 2 of these 7 themes. Customer-focused digital development, and the other would be platform banking. Now, what do we mean by really customer-focused? One is, when we talk of digital and technology, we think of the infrastructure, we think about the whole setting up of systems and processes and making business easy to achieve through paperless processes. But that's only the tip of the iceberg. That's very internal focus. That's what makes microfinance institutions reduce cost and make things simpler, swifter. But what about the customer? How do we make your digital engagement better with the customer? Why will the person who's taking a 10,000 rupee loan today, or let's say 25,000 in the future, be engaged with you? What value-added services would you be providing? Would you be providing accounting services? Would you be providing tax services on a platform to them? Would you be providing them with a lot of content to help their businesses? Because if you do so, if their businesses get upgraded with things and tools that they do not have access to today, make no mistake, your own collection and further disbursement of loans will follow like a knife through butter. So I think that a lot of thought is required in the industry on that aspect. And they will find a lot of points there, and we can deliberate later. On platform banking, now when we talk of platform banking, it's all about scale. It is a fragmented industry. The industry is still yet to come together and offer things at scale. You heard that from several speakers that people don't even know, in fact, Dr. Ghosh said, where is the person who has taken a small shop loan, where is he taking his two-wheeler loan from? Now, we don't know this. So, information and data. So, while technology has been adopted by most microfinance institutions today, there's not even been 5% adoption of analyzing data, figuring out, being a data-driven organization, launching products, market views are always still being taken from impressions on the ground rather than relying on analytics and data. And this is an industry of data, humongous data. And as we speak, data is getting richer and richer and becoming big. Lastly, I'd like to talk about relevance. How relevant is the lending industry to the business needs of people who are taking the loan? Do they look at it only as a source of money or a source of help, assistance in their particular business? Are the loans being customized, hyper-personalized for the purpose for which the loan is being taken? Because these are largely productive assets and productive business loans. And then only the leakage from productive asset loan to consumption issues will stop. So I will urge you to go through the paper. Please do read it, please do comment, please get back to us with all your thoughts, and please criticize if you feel certain points have not been brought out. So with that, I will move to the exciting part, as we say, is launching the paper in physical form. Hopefully next conference onwards, we will do digital unveiling in a more exciting manner. So if I may just request everyone on stage to just maybe stand up and open the paper, and I'd like to also invite Vivek Belgavi and Avnish Narang. Vivek Belgavi is our partner leading FinTech innovations and alliances, and Avnish Narang, who is in Calcutta, they have really created the paper along with Amphi. Vivek, you want to just say hello? Yes, please. Yeah, of course. Please, everyone. Yes, absolutely. Avnish, come on. Come on. Yeah. That's right. Actor boy. One is enough. One is enough. One is enough. Come on.
Thank you, sir. Before we break for tea, I would now like to invite a renowned author, and we all recognize him and we love his work, Shri Tamal Bandyopadhyay. Please come to the dais. He is not only an author, he is also the consulting editor of Business Standard and a senior advisor of Jana Small Finance Bank for the relaunch of his book, Roller Coaster, An Affair with Bankers. Please, sir.
So, good afternoon and thank you, Amphi. Oshit Babu amake bollen. I told him that this is not a platform for launching any book, etc. This book was launched by all these people who saw in Bombay 2 days back, but he insisted I must talk about this because we have a microfinance session later. So I'll just take 2 minutes, not before coming, and not delay your tea. Before that, I'll ask just if you just show the book. You have already seen it. Okay. So, whatever. Okay, I'll stand there. I'll stand there. So, since he has asked me, so I'll just say a few words about the book. This is my 7th book, and it's very different from the past 6 books. One of them was our Ghosda, Guru of Microfinance in India. So that was one of the books, and this is my 7th book. But all six books, which are very data heavy and talking about some institutions or talking about balance sheet, talking about inflation, talking about macroeconomic stability, balance sheet, ROA, ROE, profits, etc., etc. One book got me into trouble. 200 crore case was filed against me. I had to fight in Kolkata High Court and Supreme Court. That is Sahara book. My last book got most of the awards in India, called Pandemonium, which was the best business book of the year. Tata Litfest Award, Scotch Award, FICCI Award, Kalinga Award, etc. But this book is all about fun. I just 2-3 instances I'll tell you. These are all the bankers you know, not about their balance sheet, not about return on assets, not about how many times book the thing is trading, but what do they drink? Do they drink wine or do they drink whiskey? What kind of? Subbarao doing lungi dance, you have seen that. And one banker, he has a bald pet, kind of bald headed. So he would eat in his executive lunch room, and there will be somebody from the kitchen who will be paid some 24,000 rupees or something. His only job is, when he will eating green chili, just put the white towel and wipe his head. Okay. Similarly, another banker, he told me that you people think that we do all this risk management, underwriting, etc., etc. Come inside. Then he showed me একটা কালীর মূর্তি ওনার ভেতরে আছে মন্দিরে বললো there is a temple of goddess. They said whenever there is a proposal there, I put it on Ma's feet. If it sticks there, it will be yes. If it falls, it will be no. And the credit management committee, etc. have been told Ma ऐसे बोला, तो उसी हिसाब से either you approve it or disapprove it. Ultimately, Ma is the underwriter. Okay. Chandrasekhar Ghosh also there in this book in a very little way, how he built Bandhan a little bit. And you got everybody, like 2-3 examples I will give you. Amitabh Chaudhary of Axis Bank, he will say that I will come to this branch for something, say Bombay from Calcutta he is coming. But he will not go to that branch, he will go to the other branch. He will not check the books, etc. He will see the collapsible grade ka grease kaisa hai. Is it greasy or is it clean? On the table there is dust or no dust. So that's the kind of thing he will see. Or say Uday Kotak. Uday Kotak will go to Pune in train, and from Pune he will take an auto rickshaw to meet the investors. But he will get down before the hotel, because if the investors see Uday Kotak coming in an auto rickshaw, they will not buy his stock. So he will just walk into the hotel. So those are the kind of stories about how, say, Urjit Patel used to wear a half pant, and 8:30 he will go out to buy from a Amul whatever you call it, kiosk for his mother. At 8:30 the governor is going out and buying a milk pouch for his mother every morning religiously at 8:30 in his shorts. So this story is all about them. It's about The last word is this, is about psychology of bankers. There are some chores, there are some institutional builders, there are some great leaders, like for instance, right now the ICICI Bank CEO, he thinks that he is a trustee. ये बोले कुर्सी तो हर दिन के लिए नहीं है, kursi just for how many years I am there in the kursi. So I am just a trustee, I am doing my job because I know that I will have to leave the kursi. So this book talks about who is bigger, the bank or the banker, and the psychology of banker. So all of you, I mean, some of you are in the leadership position already, some of you will be the leaders. If you feel like, pick up the book. I have a vested interest because every book you buy, I get some 8% or 9% thing. So I have a vested interest. Trust you me, there's a stall outside. It's all fun. You will not get bored. And it hit 10th was released. Since 10th, the moment it is released, it's the #1 best-selling book in Amazon. And continuously I'm getting messages and all. So if you feel like, you can pick up the book there. They must be giving some discount, but it's all about fun. It's all about you yourself, the characters you know, but the other side of their characters, it is their story of their bedroom, it's the story of their kitchen that you don't know. Thank you. Thank you, Ashit Babu, thank you, MP.
Thank you, Mr. Bandhavadhyay. And yes, ladies and gentlemen, there's a stall outside. You can purchase the book, as Ashita said. After the break now, we will have 2 different panel discussions in parallel. The first one is on the role of emerging technologies and digital rails in enabling transformation for MFIs. The other session is on the way forward, reimagining the future state and the strategic roadmap for financial inclusion. So we'll break for tea. Before that, I would request Mr. Mighty to please share token of our appreciation with all the esteemed dignitaries on the dais. So firstly, Mr. Mighty. Yes. Mr. Mighty, request you to please, Mr. Mighty, to please hand over a token of our appreciation to Mr. Shudatta Mondol, Deputy Managing Director, SIDBI, Mumbai. Oops, yeah. Thank you so much, sir, for being here with us today. A token of appreciation for Mr. Chandrasekhar Ghosh, Managing Director, Bandhan Bank. Dr. Alok Mishra had to leave, but okay. Dr. Alok Mishra had to leave, but special thanks to Mr. G.G. Mamen. A token of our appreciation, sir. Mr. G.G. Mamen, Executive Director of Sadhan. Ladies and gentlemen, please put your hands together. Mr. Joydeep Roy, part of PwC, thank you, sir, and thank you for the thought leadership paper. Our esteemed guest from Bangladesh, Sri Mohammad Abdul Awal. Thank you so much, sir. Please put your hands together, ladies and gentlemen, for Mohammad Abdul Awal, Executive Director, Credit Development Forum, Bangladesh. আপনি নিলে পরে আবার অন্যদের বাকি Enamul Haq, CEO of Asha International, Dhaka, Bangladesh. Thank you, sir. Thank you, sir. Thank you, sir. Srimati Deepmala Ghosh, General Manager, NABARD, Kolkata Regional Office. Thank you, ma'am. Please put your hands together, ladies and gentlemen. Shri Manoj Nambiar, Managing Director of Arohan Financial Services. Thank you, sir. Shri Tomal Bandyopadhyay, thank you, sir, for being here. And finally, Shri Saurabh Bajpai, may I please request you to come on stage and accept a token. Saurabh Bajpai, sir, thank you. DGM of SIDBI, Delhi, thank you, sir, for being here. Thank you, sir, for being here. A round of applause, ladies and gentlemen, for Mr. Saurabh. Thank you, ladies and gentlemen. We'll now break. Chairman ke amrai debo pore. Chairman ke amra debo. Chairman ke Ashidda Deven, our CEO of AMFI. Our esteemed chairperson, Shri Ajit Maiti, chairperson of AMFI West Bengal. Thank you, sir. Thank you. We'll now break for tea and reconvene in about 15 minutes. Request you all to please step outside while we redo the hall for the next session.